In this session we going to learn about income under the head of salaries. Section 15 to Section 17. Before that, if you're watching my video without subscribing to my channel, do subscribe and like the video, it motivates us to upload more. This channel runs on without monetization, we don't earn any income, my only purpose I opened this channel to share knowledge among students to score good marks. All I need is your support, so subscribe and like my video. Perquisites. The term perquisite indicates some extra benefit in addition to the amount that may be legally due by way of contract for services rendered. Perquisite may be provided in cash or in kind. Perquisite may arise in the course of employment or in the course of profession. If it arises from a relationship of employer-employee, then the value of the perquisite is taxable as salary. However, if it arises during the course of profession, the value of such perquisite is chargeable as profits and gains of business or profession. Reimbursement of expenses incurred in the official discharge of duties is not a perquisite. Perquisite will become taxable only if it has a legal origin. For clear understanding, let's see an example. Example: Mr. Aaron Warner, an employee, is given a house by his employer. On March 31, 2025, he is terminated from service, but he continues to occupy the house without the permission of the employer for 6 more months, after which he is evicted by the employer. The question arises whether the value of the benefit enjoyed by him during the 6 months period can be considered as a perquisite and be charged to salary. It cannot be done, since the relationship of employer-employee ceased to exist after March 31, 2025. However, the definition of income is wide enough to bring the value of the benefit enjoyed by Mr. Aaron Warner to tax as income from other sources. Types of perquisites. Perquisites may be divided into 3 broad categories. Perquisites taxable in the case of all employees. Perquisites exempt from tax in the case of all employees. Perquisites taxable only in the hands of specified employees. Perquisites taxable in the case of all employees. The following perquisites are chargeable to tax in case of all employees. Value of rent-free accommodation RFA provided to the assessee by his employer, computed in such manner as may be prescribed. Section 17 subsection 2, clause I. Value of any accommodation provided to the assessee by his employer at a concessional rate. Accommodation would be deemed to have been provided at a concessional rate if the value of accommodation computed in the prescribed manner exceeds the rent recoverable from, or payable by, the assessee. Section 17 subsection 2, clause 2. Rent-free official residence provided to a judge of a high court or to a judge of the Supreme Court is not taxable if they exercise the option of shifting out of the default tax regime provided under Section 115 BAC 1A. The value of any benefit or amenity granted or provided free of cost or at concessional rate to specified employees, which is Point 1A. By a company to an employee in which he is a director. Point 1B. By a company to an employee being a person who has substantial interest in the company. That is 20% or more of the voting rights of the company. By any employer, including a company, to an employee to whom the provisions of 1A and 1B do not apply, and whose income under the head salaries, whether due from, or paid or allowed by one or more employers, exclusive of the value of all benefits or amenities not provided for by way of monetary benefits, exceeds Rs. 50,000. Section 17 subsection 2, clause 3. Listen carefully. Salary for this purpose is basic salary plus dearness allowance plus commission, whether payable monthly or turnover based, plus bonus plus fees plus advance salary plus arrear salary plus any other taxable payment. plus any taxable allowances, plus any other monetary benefits are motor car, sweeper, gardener, watchman, or personal attendant, gas, electricity and water, education facility, free or concessional fare, deductions under Section 16, as applicable, payment by the employer, in respect of an obligation, of employee, amount paid by an employer in respect of any obligation which otherwise would have been payable by the employee. Let's see an example. If a domestic servant is engaged by an employee and the employer reimburses the salary paid to the servant, it becomes an obligation which the employee would have discharged even if the employer did not reimburse the same. This perquisite will be covered by Section 17 subsection 2, clause 4, and will be taxable in the hands of all employees. Amount payable by an employer directly or indirectly to effect an assurance on the life of the assessee or to effect a contract for an annuity, other than payment made to Recognized Provident Fund, approved. Superannuation Fund. Amount payable by an employer directly or indirectly to effect an assurance on the life of the assessee or to effect a contract for an annuity, other than payment made to Recognized Provident Fund or approved superannuation fund or deposit-linked insurance fund established under the Coal Mines Provident Fund and Miscellaneous Provisions Act, or Employees Provident Fund and Miscellaneous Provisions Act under this section. However, there are schemes like Group Annuity Scheme, Employee State Insurance Scheme and Fidelity Insurance Scheme, under which insurance premium is paid by employer on behalf of the employees. Such payments are not regarded as perquisite in view of the fact that the employees have only an expectancy of the benefit in such schemes. In case employer has paid life insurance premium on behalf of the employee, then it will be taxable for the employee, and further employee can claim deduction under Section 80C from gross total income, specified security or sweat equity shares, allotted or transferred by the employer. The value of any specified security or sweat equity shares allotted or transferred, directly or indirectly, by the employer or former employer, free of cost or at concessional rate to the assessee under this section. Amount or the aggregate of amounts of any contribution made to the account of the assessee by employer in a recognized provident fund in NPS in an approved superannuation fund. The amount or aggregate of amounts of any contribution made in a recognized provident fund in NPS referred to in Section 80 CCD 1 in an approved superannuation fund by the employer to the account of the assessee, to the extent it exceeds Rs. 7,50,000 annual accretion to the balance at the credit of the recognized provident fund. NPS approved superannuation fund, which relates to the employer's contribution and included in total income on account of the same having exceeded Rs. 7,50,000. Section 17 subsection 2, clause 7, and Section 17 subsection 2, clause 7a, are not applicable in case of a statutory provident fund. The value of any other fringe benefit or amenity as may be prescribed by the CBDT. They are concessional or interest-free loan, traveling, touring and accommodation other than LTC, free food and beverage to employees during office hours, gift to the employees, credit card expenses, club expenses, use of movable assets by the employees, transfer of any movable assets to the employees, value of any other benefit or amenity, service, right, or privilege, Annual accretion to the balance at the credit of the recognized provident fund. NPS. Approved superannuation fund which relates to the employer's contribution and included in total income, on account of the same having exceeded Rs. 0.7,50,000. This one is effective from assessment year 20 to 21. 20 to 22. Any annual accretion by way of interest, dividend, or any other amount of similar nature during the previous year to the balance at the credit of the recognized provident fund or NPS or approved superannuation fund to the extent it relates to the employer's contribution which is included in total income in any previous year under Section 17 subsection 2, Clause 7, computed in prescribed manner. Section 17 subsection 2, Clause 7a. In other words, interest, dividend, or any other amount of similar nature on the amount which is included in total income under Section 17 subsection 2, Clause 7, would also be treated as a perquisite. The CBDT has, vide Rule 3b, notified the following manner to compute the annual accretion by way of interest, dividend, or any other amount of similar nature during the previous year. TP is equal to, peak divided by 2, multiplied by R plus, PC1 plus TP1, multiplied by R. TP. Taxable perquisite under Section 17 subsection 2, Clause 7a, for the current previous year. PC. Amount or aggregate of amounts of employer's contribution in excess of Rs. 7.5 lakhs to recognized provident fund, National Pension Scheme under Section 80 CCD and approved superannuation fund during the previous year. PC1. Amount or aggregate of amounts of employer's contribution in excess of Rs. 7.5 lakhs to recognized provident fund, National Pension Scheme under Section 80 CCD and approved superannuation fund for the previous year or years commencing on or after April 1, 20 to 20 other than the current previous year. TP1. Aggregate of taxable perquisite under Section 17 subsection 2, Clause 7a, for the previous year or years commencing on or after April 1, 20 to 20 other than the current previous year. I. Amount or aggregate of amounts of income accrued during the current previous year in recognized provident fund, National Pension Scheme under Section 80 CCD and approved superannuation fund. FAVC. Amount or aggregate of amounts of balance to the credit of recognized provident fund, National Pension Scheme under Section 80 CCD and approved superannuation fund on first day of the current previous year plus amount or aggregate of amounts of balance to the credit of recognized provident fund, National Pension Scheme under Section 80 CCD and approved superannuation fund on last day of the current previous year, by 2. Lastly, here you should note that where the amount or aggregate of amounts of TP1 and PC1 exceeds the amount or aggregate of amounts of balance to the credit of the specified fund or scheme on April 1, 20 to 24, for previous year 20 to 24, 20 to 25. Then, the amount in excess of the amount or aggregate of amounts of the said balance shall be ignored. For the purpose of computing the amount or aggregate of amounts of TP1 and PC1, the following perquisites are exempt from tax in the hands of all employees. Telephone. Telephone provided by an employer to an employee at his residence. Transport facility. Transport facility provided by an employer engaged in the business of carrying of passengers or goods to his employees either free of charge or at concessional rate. Privilege passes and privilege ticket. Privilege passes and privilege railways to its employees. Perquisites allowed outside India by the government. Perquisites allowed outside India by the government to a citizen of India for rendering services outside India. Employer's contribution To staff group insurance scheme. Employer's contribution to staff group insurance scheme. Annual premium by employer on personal accident policy. Payment of annual premium by employer on personal accident policy effected by him on the life of the employee. Refreshment. Refreshment provided to all employees during working hours in office premises. Subsidized lunch. Subsidized lunch provided to an employee during working hours at office or business premises provided the value of such meal is up to Rs. 50. This exemption is available only if the employee exercises the option of shifting out of the default tax regime provided under Section 115 BAC-1A. Recreational facilities. Recreational facilities, including club facilities, extended to employees in general, that is, not restricted to a few select employees. Amount spent on training of employees. Amount spent by the employer on training of employees or amount paid for refresher management course including expenses on boarding and lodging. Sum payable by employer to a RPF or an approved superannuation fund. Sum payable by an employer to a RPF or an approved superannuation fund or deposit-linked insurance fund established under the Coal Mines Provident Fund and Miscellaneous Provisions Act, 1948 or the Employees Provident Fund and Miscellaneous Provisions Act, 1952 up to the limit prescribed. Leave travel concession. Leave travel concession if the assessee exercises the option of shifting out of the default tax regime provided under Section 115 BAC-1A, subject to the conditions specified under Section 10. Note: value of leave travel concession provided to the High Court judge or the Supreme Court judge and members of his family are completely exempt without any conditions if they exercise the option of shifting out of the default tax regime provided under Section 115 BAC-1A. Medical facilities. Medical facilities subject to certain prescribed limits. Rent-free official residence. Rent-free official residence provided to a judge of a high court or the Supreme Court if they exercise the option of shifting out of the default tax regime provided under Section 115 BAC-1A. Conveyance facility provided to high court judges under Section 22B of the High Court Judges, Conditions of Service, Act, 1954 and Supreme Court Judges. Under Section 23A of the Supreme Court Judges, Conditions of Service, Act, 1958 if they exercise the option of shifting out of the default tax regime provided under Section 115 BAC-1A.